Um, so we're technically live. We're just getting started, and we don't have any viewers on, it looks like, quite yet, but we can go ahead and start our conversation here soon, maybe, and introduce ourselves if you're ready to go. Since it's the first time I've done live, I went live a little early, and so there was a little setup going on, but we're good now. We're
Yes,
here, we're on time.
yes, we are on time. We are waiting for everyone. So why don't you start? Are you recording this session or
It'll
you will
be
be?
automatically posted on YouTube as a recording after, yes.
Got it. So will you want you start with yourself and then introduce and then we can go like that and maybe we'll
Yeah,
wait for others to join.
yeah, absolutely. Yeah. All right. So for those of you who are new to our channel, I'm Teresa Wellman with Homeowner Experience Real Estate. And today we're here to discuss some common questions about the market, about appraisals, numbers of offers, kind of what's going on in the greater San Jose Bay Area market. And I have a lending partner here with me today, Amitava, to give a different perspective. And we'll go ahead and have a conversation and answer your questions today. So Amitava, will you introduce yourself?
Yeah, for sure. So, hi, my name is Amitava Chakraborty. I'm from Bank of Montreal, BMO. I'm in this industry almost for 7 years. Before that, I'm having a hat of patent attorney and a chemical engineer earlier. So, having a complex understanding about the data altogether and understanding how to do this financing juggling. So, that flavor I always come and bring to the board so that way it will help us when we work with our clients try to bring and juggle that kind of, I would say it's a gymnastic, it's a critical gymnastic of your finances when you buy a home not in an area that is a stable market. Like in Bay Area always shows ups and downs in its nature of market, and that's why we bring that flavor. Not interest rate is everything. So in this session and down the session we'll talk about interest rate is not everything. It's about working as a team. It's about understanding your numbers and structuring your finances correctly will put you in the right spot and getting your offer accepted. Again, Amitava from BMO, I'm here, and then we'll talk about it. Teresa, up to you.
Yeah, perfect. Well, I think we do have a couple common questions that are coming in, and let's talk about what maybe some solutions would be. For example, here's one. I'm concerned about interest rates and think they will go down. Should I wait to buy a home? So I have an interesting perspective on that. I've actually done a video. I think Amitava, you probably have some information. So why don't we chat a little bit about that question for now to start?
I would say this is $1 million question. Having a crystal ball in your hand, and when you say that hey, interest rate will go down or not, there is a lot as we see since from the beginning of the year, like market all on a sudden go up shoot up like stars because Fed has decided initially that they will hold up, and then all on a sudden they said, okay, down the line we will may reduce the rate, but when there is no numbers or no timeline is there. So all the buyers that I met in open house, and certainly we met you and me together in multiple different open houses or broker open, then they're asking the rate will go down eventually, so we should buy now. So there is no crystal ball, but I would say the way economy is behaving, though this, I would say the inflation data, it's showing that inflation data is curing in a very slow but steady pace. So should be, we are anticipating somewhere around, I would say June, there should be a rate cut, or maybe there is another September and October, there is another rate cut could happen. But
Mhm.
again, if buyers, you are only looking when the rate will be down, I will be getting into the market by now. Just to give you a correlation, the average price, especially in Santa Clara County, the year month over month, the listing price has gone up. And also, if you see the sales data, definitely, I believe, Teresa, you will show about the data stats down the line, or you'll talk about it. It's
Mhm.
really, really going high. I would say just in a matter of, I would say 45 days window, the sales price got increased by 12.3%. And that's huge in a shorter span of time. Last year, similar time, it's not a crazy market like this back in 2023. But this is what we are living in a different world, I would say always. Though
Mhm.
we are always saying that it's It's a stable market, but sometimes it's behave really weird. But just to again sum up and answer this question, yes, we do not have a crystal ball when the rate will go down, but talk to your preferred lender, talk to your realtor, understand that what your need is. And if you're buying for your first house, even you're buying for your dream house, just make sure like you are going in the right direction. Do not only think about the rate as a determinant factor.
Yeah. Yeah. And I mentioned that I do have a video where we crunch some numbers on prices versus rates. And then looking about the refinance situation that you just mentioned, Amitava, like if you get in today and you refinance, what those numbers look like versus if you waited to buy, what those numbers would look like. It's quite a great video. I'll pull it up here in a little bit and share it with you. But let's talk about some of the facts that are going on right now. We basically have very low inventory. If you're looking to buy, you probably realize that. I'll go ahead and share here a screen of one of the charts that I have. And you're going to see that historically, we normally would see an increase in inventory this time of year, right? Here we are at the end of March, early April. Now this is data through February, but you can see this yellow line is how many homes are for sale. And we are in a record low inventory market. The number of homes for sale is so extremely low that it is pushing up prices. So I do have another chart we'll get into, but as you can see, there's been an increase over the last several months. It looked like that was dampering down, but again, this is February data. What we've seen out with pending sales and with buyers that are out shopping, that these numbers are shooting up even more, which makes sense because supply versus demand, right? So our supply is so extremely low, and there are more and more buyers jumping into the market right now as it's getting into spring. Now, if interest rates do go down in June or sometime, I anticipate even more buyers will be jumping in the market, right? Do you agree?
I would say your bullseye. If the same data as you're just seeing that all on a sudden after January 2024, there is a spike. And another thing, I believe, if you do your a little bit more digging in research, the days on market, anything property is coming, why you are seeing that inventory is kind of getting lower and lower. The reason being property is not staying back in the market for a like even 30 days window, forget about 30 days, like even not for a 2.5 weeks window. A desirable home is coming and going like quickly,
Yep.
so anything new pouring of inventory into the system, it's immediately gone into pending status. So average days, I would say in last quarter of the last year, between October to December, average turn, like average time or days on market is, I would say 32 days on an average. I would say the range could be 23 to 32 days. And now this average range just in a matter of a month has changed from 7 to 17 days. So it's crunch down a bit. That's why this inventory problem is still there. So inventories are coming. Sellers are more motivated to bring the property on market because they are more interested that, hey, in this in this process, maybe I will get a better money on the table. But definitely buyers are so aggressive. The process is so aggressive right now. And on the other side, I'm seeing lesser the like close of escrow, like 14 days, 15 days, 16 days, 21 days. Maybe
Mhm.
I can talk about more about this, that shorter escrow timeline will create more pressure on my side, different lending side, because we need to understand that all on a sudden, system hasn't changed because last year in the banking industry we had seen lots of layoff like workforce shortcuts. So right now definitely that is another challenge that we are facing. I'm not definitely going into that. Yeah, you
Yeah,
can.
so I'm sharing some data here of the actual San Jose market, and I'm changing it over to the median days on market, which is really what you were talking about, is
Yep.
how quickly homes are selling, right? And you can
Yep.
see we've seen a huge decrease in
Yep.
that recently, going way, way down. So the average right now is 7 days on market. Um,
Exactly. I
and
just
it's
told you 7 to 17 days. It's exactly the data is supporting that fact.
Yeah, exactly. And this is the San Jose, this is San Jose specifically, right? So, but you can see how this ebbs and flows during different times of year or different markets. And it does make a big difference on also, like you said, a good property is going to sell so quickly with so many offers. So that is an important factor to be considering for sure.
Right, right.
Yeah. So all of this put into, we were discussing the question about I'm concerned or I'm thinking interest rates are going to go down. Should I wait to buy? So all of this is telling us right now the market is super strong and it's very competitive. But what that means is likely prices will go up. And if interest rates do go down, likely more buyers will be coming in the market, which in turn is just going to make it more difficult or more expensive for you to buy. So ultimately, if your numbers are working out today, it's really important because this is such a unique market that you get into a property and you can refinance later or whatever to make it a little more financially attractive over the long run. But equity is building very quickly right now. So you want to get a piece of that and get in the market.
True, 100%.
Yeah. Okay, so another question, is it a good time to buy? So I think we've really just kind of talked about that. Maybe that question came in a little bit after this discussion started, but I would say yes, it's a good time to buy. Really, in this market, it's always a good time to buy. The challenge is going to be how difficult or how competitive it is, and that changes. So doesn't make it not a good time. It's just sometimes more difficult to get in and to buy when it's a very competitive, low inventory, low number of homes for sale market. Do you have any thoughts on that, Amitabha? If it's a
I would
good time
say
to buy?
that, as you always see me, that I love to talk about data. And just with this, I will give you a correlation. In Fremont, 9594536, this is a precise zip code. It's a Glenmore is an area where all the ranch style single story houses are available. Last year, 1594 square feet, 3 bed, 2 bath sold in the around like September, October timeframe, about 1,680,000 all cash offer. Think about that time. I was thinking it was crazy offer because on that particular street, I know like there is no house being sold that high that point of time. But now, three houses down that house on that same street in that Glenmore neighborhood in 94536, 1594 square feet, they got an offer more than 1,970,000. Can you believe it? Just not in a matter of 6 months. So again, I'm summing up the thought process. Last year, September versus versus this year, March. It is not like a year difference. It's not like economy has changed over a lot, but competition has gone shoot up like stars. So one of my client, why I'm giving you so precise numbers without like saying anything else. So one of my client was bidding for the other house back in September, and he was so protective. He said, no, 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 it's looking super high. I
Yeah.
see the houses are generally sell in the street about 1.5-ish range. I should not go more than 1.5-ish. And ultimately he put 1.5, close to 1.6 million, I would say. And then later on, it all pending for 1 point and sold. After that, it sold, we said, oh, someone put like 80, 85,000 hires and got it.
Yeah.
Now the same person, I'm giving a like very, it's irony of it. The same family now putting close to $1.9 million offer, but
Mhm.
still outbid due to the fierce competition in the market. So that is what, as you just mentioned, like it's a right time. As you're waiting, you may lose out.
Yeah, and I think to put that in perspective, when those big offers come in, lots of times buyers say those are crazy people, right? It doesn't
Yeah.
make sense. But I think in this market it is so unique that you have to have a long-term perspective, right? If you're paying what maybe seems like $50,000 more than comparable sales, look at just the perspective there. That buyer maybe paid 50,000 more than it was worth back then. Maybe it appraised, maybe it didn't, probably it didn't. But the point is he's already made 200 plus $1,000 in just 6 months on that property for putting a little extra $50,000 into it, which long-term perspective, I think anyone would take that bet or invest that kind of money and get that kind of result, right? But in the moment, it's difficult to see that. But if you step back and you look at these examples, I can talk about multiple where this has happened, where I've sold properties and offers come in and I'm like, wow, we're just shocked. Everybody's shocked at how high the number is. But then you turn around 2, 3 months later and it's like, wow, that person was looking ahead, right? And they made a good move.
And on top of that, the same example, if you think about last September versus now, there is not a much difference in the interest rate. Interest rate is almost similar in pattern.
Yep.
So again, with the example, if the client is asking me, hey, Mitaba, I lost the house and now both the times, but there is not a huge difference. It's not like a 5% versus 7%. No, that's not the case. Only a quarter point here and there in the rate pattern. So
Yep.
this is something as a buyer, as your team, we need to understand interest rate. That's why I talked all about like not interest rate. It's like marry the house, dead the rate kind of a
Mhm.
situation.
Mhm.
So do not make sure like you are only thinking about interest rate. It will change. You do not have a control on it, but
Yep.
you have a control on your finances. You have a control on your numbers. Find out what would be your monthly that we would comfortably achieve as a family.
Yep.
After that, talk to your realtor.
Yeah. Because then when you're buying, you have control on how big of a house, what area, and how much you offer, right? But you need to keep that in perspective. And if you're getting outbid for what you thought you can afford, then you need to readjust your goals to be able to find something that you can get into. For example, I've been working with a buyer who was really hoping for a 3-bedroom, 2-bath home, but they're right at a price point where that's a cusp of you need to buy a townhome versus a single family. So one way we're adjusting is actually looking for a 2 or 3-bedroom, 1-bath home that can still get them the single family and the yard, but in their budget since prices have escalated so much. So it's important to adjust as you go along as well. Yeah. Okay, so the next question that's come in is there aren't many houses on the market right now, true, like we discussed. Will there be more options if rates go down? Again, we don't have a crystal ball, right? But I think one of the factors that is holding inventory down is that current homeowners do have a low interest rate. And for them to make a move up, which is natural in life, that you might outgrow your space or want a better school district as your children get older, those natural move up buyers have not really been transacting recently because it is a much bigger step to increase their down payment or the dollar amount of the house plus double the interest rate potentially, right?
Right.
So I think in order for those move up buyers to get back into the market and provide more inventory in that sector, we're going to have to see a significant change in the interest rates. I don't think we expect that in the next year, right? You had mentioned, Amitabha, 2 rates decreases possibly this year, but those are what, maybe quarter point each?
I think so. Yeah.
Yeah. So maybe at the end of 2024, we're looking about a 0.5% interest rate improvement, which is still probably not enough for those buyers who are holding back financially for a move up to actually put their house on the market and make a move up, right? So
Right.
I don't unfortunately think we're going to see a huge increase in inventory. I think one of the challenges we have right now is the age demographics, right? Younger buyers, people in the millennial generation have been moving into home buying, and it's a really large generation. And the baby boomer generation hasn't really started to sell or move out of their homes yet. So we kind of have inventory locked between these two larger generations. And until we start to see some movement as boomers start to sell or age out of staying in their home by themselves, I don't think we're going to see a significant increase. And honestly, San Jose market has always been a low inventory market. To put it in perspective, the National Association of Realtors will say 6 months of inventory is a neutral market. In San Jose, that's never been the case. We just never see that level of inventory. When we see 3 months of inventory, we notice that things slow down a little bit and could be a little bit more negotiation between buyer and seller. But the last time a buyer's market, a true buyer's market, not even 6 months of inventory, but more inventory than usual happened was like 2009, 2008, end of year, up to like 2011. And then we really changed the curve. So I'll bring up the chart, Amitabha, while you comment on that to show you perspective of that market in this area. So do you have any other thoughts about will there be more home inventory? I know that's more my category, right?
Right. But Whatever you just mentioned, that's very true. Like when this entire inventory is kind of locked between two different high profile domain who are the, I would say, the determinant factor for inventory to push. That's the challenge, and especially the generation who locked their interest rate between a low interest rate of 2 to 3%. I do not see any motivation for them to going around 6% unless there is a huge change in their economic pattern.
Yeah. Okay. So I am bringing up my screen share right here. Can you see it, Amitabha? There it comes. Okay. So here is Santa Clara County
Yeah, I can
single
see that.
family home market
Yeah.
since the year 2000. So I got into real estate in 2004 and I went back and pulled some historical data. This is a chart I've been tracking myself for the last 20 years. And what is really interesting is what we talked about of buyer's market versus seller's market, how I mentioned it. Here you can see the number of homes per sale, the yellow line was at a really high peak, and that started to increase in 2006, 2007, then 2008 as we had bank crashing, you know, short-term loans coming to need to be paid off, things like that. The foreclosures went up higher, and we had a lot of inventory, record inventory we've ever seen in this area. But it quickly decreased as homes got bought up. So here's where I say we had more of a buyer's market because we had a lot more homes for sale than we did sold homes. So the green is the sold homes. But as you can see, it quickly dampened down to what we would call a more normal market where there's a little bit more homes for sale than selling each month. And then the last several years, we've seen many interesting phenomenons of 2017 to 2018, where the lines actually inverted, where that yellow homes for sale line was less than the number of homes selling. And how is that possible, you might ask? Well, just like we talked about, it takes 7 days for most homes to sell, but to close the sale is taking 21 to 30 days. So there can be a lot of pending properties, but the amount available for sale is moving so fast that it's actually lower. So that's a big, huge indication that we have a really crazy hot sellers market. And you see, we saw that in the pandemic, not the very beginning, but most of the rest of the pandemic. And then we saw it again at the latter part of 2023, and really 2024 has taken off that way as well. So let me see if I can zoom into that more. It's not going to get us where we want, but we're definitely in a unique market. And I think keeping that perspective, if you want to own a home here in Silicon Valley, you just have to jump in when you can make the numbers work.
Right.
I do have another chart that might be interesting to look at. And I do find when I'm meeting with home buyers, they find this chart quite interesting. So let's look at this one as well. This is showing the amount over on average that home buyers are paying. So we talked about overbidding. Overbidding is so common in our market. This shows it graphically when this is zoomed in on just San Jose, not Santa Clara County. But when we had the yellow line of homes for sale below the green line of number of homes, you can see the overbidding, the delta between the orange line and the red line got bigger and bigger, right? So we see that this market ebbs and flows. Same thing happened in 2017, 2018, and then quickly shrunk. So you see it's pretty normal in our market to have overbidding, especially middle of the year. And it's different degrees. At this point, this was an 18% average over that people were paying to get into a home. And this is when interest rates were extremely low, and then rates went up so quickly that quickly changed because affordability very quickly changed for home buyers. If you look at today, there is a big delta there already of how much over buyers are paying for homes. So that might give a little more perspective on that.
I believe that's a great, last one is a great example that I just talked about a scenario, September versus last year versus now. A same family who are hesitant of putting 1.6 million on table, they're putting 1.8 million, just 200,000, fierce competition. So That's what we need to understand, that whenever you are making your decision, this decision is not based on one factor like an interest rate, one factor that, hey, why should I put my money because there is no house being sold there? Think in a different direction, because all these data points, I always love data, because data is a determinant factor that how things will move. It's kind of predictive understanding of the model. It's called data modeling. So when you put those data, whatever chart we are seeing, this is a kind of predictive data modeling thing. Also, you've put in a predictive future that will say this is going to happen, and the same thing happened as you just showed on the picture or the chart you just provided earlier. If you can pull it
I'll bring
up.
it back up. Yeah.
Yeah, so it will be easier for anyone who is following with that dialogue out going out here. So whatever the list price versus whatever they're paying, the delta is huge right now. As this two different gray and the light gray, this two different line on the January end, as you can see, the delta is keep on increasing. Last time it was keep on increasing about, I would say, July 21st till February, I would say August 22nd. So almost a year. It was a period then when
Yeah.
definitely
This,
the delta was super, super high. That the delta exactly that period we are talking about. Like
yeah.
people are listing, whatever it's listing is coming in, always there is a high, high bidding going on. And seems like we have just started getting that fear right now. And do not wait for, I would say, this interest rate game altogether, because sometimes we do not have control on that. And there are multiple factors. Even like sometimes Fed is saying that interest rate may go down. There would be a two rate cuts. But again, I would say this is only up again a part of the prediction. Multiple economic layers are included into it. It's not like one particular factor will determine that rate will go down. It will have multiple simultaneous factor will, I would say, a cumulative effect on it. So think differently. Think and talk to your partners, especially your realtor partners, your lender partners. Even if believe me or not, last this particular week, from Monday till Thursday, the mortgage-backed securities went back like really bad. 10 years treasury is completely ups and like I would believe 22 points up on a particular day. So that way, definitely it is not showing a great sign. And interest rate got increased almost by a quarter point in just this week that we are in. So being that said, you need to work properly, go back and find out whether you are still qualified for the purchase price that you are qualified for 2 weeks back. So this is a time every weekly or twice, at least twice a month, check with your lender partner. Hey, this is my bandwidth. I am qualified for suppose 2.2 million. Still I'm qualifying for 2.2 million. And different policies are keep on changing, like your initial RSU grant, because I'm seeing some like new paperwork, people are start using their, I would say, not a paper money, but a virtual money. So virtual monies are slowly coming like Bitcoins. I'm not quoting any particular name, but different way of different new generations companies are providing stock allocation, like Bitcoin units are kind of a thing, like new monies are coming into a process of their RSU component. How to tackle that one? Whether the lender has understanding, whether they have a policy in place, whether you need to liquidate before you close, whether that liquidation would impact on your cash to close at the closing table,
Mhm.
whether you are already aware of your post-closing reserve requirements. So those things should be more important rather than just the interest rate.
Yes, absolutely. And I also will add that putting this into perspective, you've mentioned data. I also reflect on and share data often, educating buyers that are new to the market about what has actually gone on in this market. For example, like we talked about here in 2020, end of 2020, 2021 through mid 2022, we saw really crazy overbidding, but we've seen that before, not quite the extreme. It's not unlikely we're going to see that again here in 2024, or we've already started to see that. But will the chart get as extreme as this? It's hard to know. I think it's really dependent on this inventory. So know that yes, the market is very competitive and yes, it's intimidating to get in, but having a lending partner that you can work on and stay on top of the numbers, having an educated realtor partner that can walk you through the market and how to actually obtain a house in this market without, putting yourself at financial risk is really important. There is a strategy and a process to getting in this market, and just realize that this is not um, it's not unprecedented, right? When we look at history, we see this kind of market in this area before, but people who bought in these times are celebrating, right? Even if you bought at this peak back here in 2022, they were getting 3% interest rates. So their cost monthly is much more affordable than what people are doing today, right? So long-term perspective, I always recommend my buyers plan to be in the house or buy a house they can live in for 7 years or more to give you that cushion to ride out any little ups and downs in the market. Do you have anything else to add on to that, Amitava?
No, I think we discussed everything on this one.
Okay, perfect, perfect. Um, so somebody is asking, what's the difference between a pre-approval and underwritten loan? And we might take that further and just say, well, they actually asked, is underwritten required in today's competitive market? How would you comment on that?
I would say let's start with that, with the pre-approval or pre-qualification. So sometimes people started understanding that, hey, pre-qualification is a different thing, pre-approval is a different thing. I would say both things are similar, but it's a kind of verbiage difference. In some organization, they call pre-qual without running your credit, just a piece of paper, sorry, without understanding any of your finances. Also, they call it pre-approval because they run your credit, took a decision through a AUS automated underwriting system, and provide you a piece of paper called a pre-approval. Give me a moment.
Yeah. So what he's saying is basically that the difference between a pre-qualification and a pre-approval is how much documentation or how much details the bank looks into your qualification. So
I
a
would say
pre-approval,
for pre-qualification and pre-approval, no documentation is per se needed. Both
okay.
the cases, bank or the lending organization, they never require to check your finances, your assets, anything. There's a fine line of difference. Like I can talk about my world in BMO world. We
Mm-hmm.
call it pre-qualification, but we do all the work like a pre-approval.
Mm-hmm.
Sometimes people come and ask me a question, Ahmed, your letter is showing pre-qualification, but how come I can present it to the seller? So
Mm-hmm.
I told the same thing, like in this, like in my world, we call it a pre-qualification because we are not like waiting all your income asset documentation, but we just give you a pre-qualification based on the data that you inputted into your application. We call 1003 application or Uniform Residential Loan Application, URLA. So you're completing it, we are giving you something. But when it comes to an underwriting, then everything has to be properly checked. All your income, all your asset, all your credit properly validated and verified.
Yeah.
And that is what we call it in BMO world, that underwriting pre-approval or conditional pre-approval.
Yeah.
Same thing. So basically, if you again sum it up, pre-qualification, pre-approval is a kind of verbiage. That verbiage can be interpreted or switch on in sometimes in different lending organization. And underwriting approval or pre-approval, conditional approval are something that is more concrete, more bulletproof, I would say, on the buyer's perspective. At least they would get to know their final underwriting conditions that they need to meet when they are into a contract and contract to closing. So that is the difference. Now, to come back with your second question, that whether it is necessary or not,
Yeah.
right now, due to the volatility of the interest rate and volatility of the stock market, if the buyer, it depends on scenarios or scenarios. So if in a scenario one, I'm talking about a buyer who had a excellent income portfolio pattern, just for an example, again, come with the data, like husband with a Google for 5 years, wife with NVIDIA for 5 years, and they have a tons of income. they have a stable base bonus RSU being received over last 3 years plus, and everything is nice and fine. And for an example, they're planning to buy a $2 million house with a 20 or 25% down, and they have not only the 20% money, on top of that, maybe they have $1.4 million in reserve in form of cash, stock, or something. My question is, do you really need underwriting? In my opinion, it's not.
Mhm.
Because if you do that, and if they're not ready, there are two things. If they're not ready, they're just started their process, then it's not a wise idea to start and tell them to complete all the paperwork because it's a work for them. It's not
Mhm.
like a, I would say, peaceful journey that in their process, they need to just every time, hey, give me this document, give me that document. And after you did the underwriting for next 10 to 12 days or 2 weeks time, and then they're keeping silent for next 2 months because they are not yet ready, they're just started their process. So being a lending partner, you need to sense and understand that urgency and the necessity, because as I said, this is a financial gymnastics that you need to juggle in your hand. So you understand, if you have a wealthy client at hand, that whether you would use that underwriting as a power, I would say a magic wand in your hand, whether you want to execute or not. If you ask me, I won't execute because I know they're well qualified.
Yeah.
On the other end, on the extreme other end, there is another example that you find a buyer, they just change jobs. They are with, for an example, they are with Apple for 5 years. They just switched their job from Apple to Amazon for last 3 months. So definitely they are getting all their package is excellent, but these are all sign-on forms, like sign-on bonus, sign-on, like sign-on RSUs kind of thing. So now
Mhm.
all of a sudden, maybe their portfolio income, which was last year is 420, if you just compare them with their base income right now for last 3 months, that gone down to 280.
Mhm.
This is a huge change. That moment, you need to use that magic wand for underwriting approval, get it underwritten so that there should not be any hiccups down the line.
Yeah.
So, as I said, it's a financial gymnastics and it's the packaging and the structuring capacity, mental acumen you should have. Talk to the client and find out that what they need and what is best for them. But just to sum up your question, underwriting is definitely good, but it depends, it's is it really required or not. If you start if doing every file underwriting, then I'm telling you, like you will be clogging the system or clogging the pipe basically, because
Yeah.
you have a limited resource of underwriter, processor, everything.
Yeah.
Suppose I'm getting every day 5 applications and I'm putting all 5 applications to the clogging pipeline, then what it will happen at a certain point of time, it will choke,
Yeah.
the productivity will choke. So that's a fine balance you need to do.
Yeah. So to summarize that, basically it depends on your certain situation, and a good lending partner who might say it makes sense for us to go to underwriting, or we're good with just a pre-approval. You want to get that expert's opinion as to what is necessary to make your file most prepared, right?
Right.
Yeah. Okay, perfect. So this question says, how much should I save for a down payment and closing costs? So I think most people know 20% is great. Closing costs today are 15,000-ish. Is that accurate, Amitava?
I would say, just to give your answer in perspective, like I have right now 10% and 20%. I would say 10% and 15%, no PMI, I like portfolio program, like jumbo programs are there.
Yep.
So you can do that. And many other organization, I believe, should have the kind of program you have.
So
But
you
if you
don't
have,
have to, just to stop you, you don't have to have 20%. There are other options.
correct, there is
Yeah.
other options. So if you think of buying again, a $1.5 million house, it's not like you need to put 300K down as a 20%. You can put a 10% down, you put a 15% down, even get a jumbo interest rate with some definitely clauses are there. So that's why if you want to talk to me, I'm here. If you talk to your other lending partner, if they have that program, talk to them. But it's certainly be there. It's not like the fact, yes, that's a thumb rule of 20%. No, there are some other options always available. Now, to give you the answer for the next part, that how much the reserve and what is the down payment, I would always say that if you are comfortable providing 20% down payment, put 20%. And after that, you need to understand that every portfolio lending needs a down payment plus reserves. just for an example, for my world, I would say if the portfolio is within a $1 million, we need a certain amount of reserves. If it is like 1 to 1.5 million, that window I need 12 months of reserves. Is 1.5 million to 2.5 million loan amount, I need 18 months of reserve as of today in March. So it depends. But if you ask me 1 to 1 that, hey, I'm your buyer and I have like just like neck to neck 12 months, I would say just make sure that you have some rainy day funds available to you as well.
Mhm. Mhm.
So, example, again with a data point example, husband and wife, you are working, one is on H1B, one is on E4 EAD. God sakes, something happens, some reason like H1 lose their job, automatically the H4 tied with lose the job. And that I have seen in last year when there is a layoffs are happening, few of the clients, they have the typical problem. Husband lose the job, they are on H1B. The spouse, which connected with the H1B with the H4 EAD, they will automatically inactive that way because everything is kind of connected.
Mhm.
So make sure like you have adequate reserves beyond what bank is asking for your own good sake. Definitely,
Mhm.
whatever the statutory policy requirement for lending, that you need to definitely provide. But on top of that, I would say another 5 months extra buffer if you have, even in the form of 401k, IRA, retirement, bond, mutual fund. I believe this is for the greater good for your own family as a rainy day funds.
Yes, yes. And this is where maybe the 10 or 15% comes into play. You might have 20%, but not with a lot of cushion or that extra rainy day fund. So you might consider a 15% down to allow that extra cushion in your, because we're of course behind you to make a good, solid financial decision. Definitely don't overstretch yourself or over, execute. But be aware what it takes to get into this market and be financially prepared in the long run as well.
Exactly. Just the same example, like if you go for 20%, you may get an interest rate lower six. If you put 15% down, you will be going into a mid six situation. Again, I'm not quoting any rate, APR, anything, just to perspective. Maybe your monthly payment would be impacted by $500 per month, but think about you are putting 200,000, like suppose the purchase price is like $2 million or loan, yeah, loan amount is example $2 million.
Mm-hmm.
5% is straight wise, it's 100,000. So
Mm-hmm.
if you are saving 100,000 versus paying $500 extra in month, it will give you a mental peace.
Yeah.
Huge mental peace. So yes, if something happens, I have a rainy day funds at least to keep me kick in the process for next, I would say more than 12 months to 24 months.
Mm-hmm. Mm-hmm. Yeah. Okay, perfect. So I have one last question here. Maybe we'll address this one and then we can tie it up.
Yeah.
So it says, should I get my own home inspection and how much will repairs cost? I've seen a lot of properties in San Jose that need repairs. So yes, that is true. Let's put that a little bit in perspective. Most homes in San Jose were built between 1950 and 1970. They all have different varying amounts of remodeling or none at all. I actually just sold a house that was 1973 original 100% throughout. Minus they did update the plumbing. But, there are going to be repairs, there are going to be updates, and this is a challenging market. So having a perspective of getting into the market and then planning for future remodeling is important. Of course, you need a functioning house and you don't want any active leaks or active issues like termites. But, a strong realtor partner can guide you through priorities of repairs and costs and how much that might be. So to your original question, should you get your own home inspection? I would say it depends on what the seller's providing. Here in San Jose, 99% of the sellers are providing an inspection up front. And there are different property inspection companies that do different levels of inspection, if you will, different thoroughness. So your experienced realtor partner can explain this to you so that you understand and have some confidence and understand if you need to have your own additional inspection or if you want to just have an inspector come out and teach you about the house so you're more comfortable. That's a different thing and a discussion about contingency, not contingency, or how to move forward. Our market today is pretty much a non-contingent market because it's so competitive. So having that discussion up front and covering your bases and putting aside money for repairs is going to be really important in the whole picture of moving forward. Do you have anything, Amitabha, to add? I know this is mostly a real estate question, but maybe you've seen something with certain clients.
I would say definitely it's a question that comes to you as an expert, but
Mhm.
yes, I never dealt with this that way, and I always tell my clients that do not upload anything related to this inspection or anything because I have nothing to do with that.
Yeah,
So whatever
the
you
bank
want to
doesn't need to see that.
kind of, yeah, like because I have nothing to do with that, so why should
Yeah.
I, first of all? And if they have any questions, I always direct it to their realtor partners, and I say, please talk to them because they are the expert. They're completing their avid, they're completing their complete process in this journey.
Mhm.
So any doubt, make sure like you are all thorough with it, even during or before putting an offer. And as
Yeah.
you just said, 99% of the sellers, they're already thorough and done with their inspection. But if you have a 1% doubt before writing an offer, always like put your right of contingency. You
Yeah.
have three contingencies: inspection, appraisal, and loan. Just execute your right, because the one that you just ended up in saying, that non-contingent contract, and people, even they're fully underwritten, sometimes they will come and ask me the same question: Amit, what do you think? Can you write on a piece of paper that we are all good? Technically, being a lender, I cannot.
Yeah.
You got an underwriting approval. What are the conditions are written? That is conditions, and condition may change down the line based on your portfolio. Again, I have plethora of experience and data points. Example, like suppose uh, you, like Teresa, you come to me that Amit, help me underwritten. I give you underwritten maybe January 2024, and then by March, like we are talking, chit chatting sometime, but you just purchased a costly Bentley and your monthly expenditure went by 13 grand a month, and I have no clue about it. And you, and see, we are good friends, I'm helping you on your loan side, but you never thought that would be a big dent for you. You said, hey, I'm earning handsomely, 13K is just 13K, and I know in next 7 years I will pay it off. What a big issue for that. But believe me, that's a huge issue concerning the debt to income ratio. Your income is not changed. Your income is in the same
Yeah.
trajectory. Maybe you are thinking that by end of 2024, I will be getting another 760 amount of NVIDIA stock to be vested. I will be getting more cash, and then I will pay off my car loan.
Mhm.
That's not the world is happening. So make sure you understand all these numbers.
Yeah. And just keep in mind the key there is debt to income, right? So any debt you take on or any change to income needs to be documented and actually happening. And so, yeah, if you take on additional debt with the anticipation of increased the income, the bank doesn't see it that way. So the bank
Sure.
needs to prove the income in your bank account. So,
Yeah,
yeah,
I think we
perfect.
covered most of the questions, right?
Yes, those I think that's the last one. I'll just tie up one little bit about how it's really important to have a experienced realtor partner in regards to home inspection and being aware. I
Correct.
just had a situation where a home buyer was wanting to make an offer on a property that had an unpermitted bathroom addition. And when we did some research, long story short, the bathroom was made into a full bathroom from a half bathroom without permits. And when I looked at the size of the bathroom, I had some concerns. So I was able to do some research and reach out to contractors to verify indeed the size of the actual shower area was not even permittable. So it's not that they just didn't permit it, it wasn't even meeting code permit size. So that was a big red flag for my client to realize and to understand and to work through. And so you want to be uncovering these things before you're moving forward, especially if you have to remove contingencies, right? But that research and homework upfront is very critical on the lending side, on the home specific side with your realtor partner or your lending partner. So I think that's a good way to tie it all up. Do we have any last closing comments?
I would say wisdom should come from you first. I will add something on top of it.
Okay. I will say, there's a lot of changes going on. There's a lot of news right now with the National Association of Realtors settlement. I'm getting tons of questions about that, tons of questions about buyer's agents and paying fees and what does that mean? And I would love to discuss with you the services we offer to protect you. And yes, there is a fee associated with that, which in some cases the seller pays for, some cases the seller might help you pay for. But making a sound financial and home decision and getting something that's going to benefit your family or household in the future is really important. So working with a very experienced partner in that area is going to be worth so much more than a small fee or anything. It's a long-term financial wealth generator, really, to own a home, and it's important to take the right steps to get it done right.
I would say you just nailed it, Teresa, by saying all the critical points. And I would just add by one quick sentence, who you work does matter in your home buying journey. We are here and we are doing the heavy lifting for you. So it's like not you who will be doing all the research, we will be there helping you in this entire journey. So keep your trust in me. And sometimes I have seen one thing, that when you talk to your doctors and lawyers, you have a complete faith on them. Take them their own professional judgment, and you should be in a good hand. So just reach out to us. I'm again Amitava from Bank of Montreal, your lending partner, and definitely here to help. And Teresa is definitely your local realtor partner and expert. I will call her queen that way. So perfect. We
Yes,
are here to help. And anytime you can reach out to us. And Teresa, if you can put our contact details, end
yes,
of this comment or something, they can always. And we will keep on continuing this basic education. And as I said, my purpose is not to sell any product. My purpose is not to sell any interest rate. And same thing, Teresa, we are here to educate our community and to make sure we are here to give back in the form of some knowledge to our society. So when they buy their home, and as you said, that a majority of portion of our buyers are millennial, they are young generation, they are buying, they are having a budding family, they're getting their dream home comes true in the Bay Area. So we are all there to help in this journey in a smooth or flawless manner. So please
yes.
reach out. That's my portion of the comment.
Yeah, perfect. Yeah, so we would both love the opportunity to speak with you. You can reach out to me. I'll put Amitava's contact information below, but anytime you also reach out to me, I'd be happy to connect you with Amitava as well. It's important to have both a strong realtor partner and a lending partner there to support you on this home buying journey. So thank you so much for joining us today.
Thank you, Teresa.
You're
Bye,
welcome.
everyone.
Bye-bye. Okay, so I ended the live stream and
Good.